Welcome back. Well, the market is flat and the volumes are also slightly on the lower side today, especially in the cash market. But let's shift focus on the oil and gas space. Ashish Jagnani, oil and gas analyst at UBS, now joins us from the sidelines of the 10th annual UBS conference. Ashish, hi, good morning. Good to have you on the show. Oil and gas is one sector which has been one of the biggest beneficiaries of the Modi trade that's played out in stock markets. You have stocks like BPCL and HPCL that have doubled. ONGC has added quite a bit. What's your sense? Is the optimism justified, especially in the PSU pack? Would you still be bullish on the stocks, or would you say that maybe they've run their course?
Yeah, no, I think clearly we've seen a decent set of reforms from the new government across the board. I mean, you've seen that over the last 1 month that they've kind of cleared a lot of pending stuff, particularly on the gas price. They've deregulated diesel. So I think the momentum is fairly right from the reform standpoint, and we are definitely positive. But I think there will be, clearly some time by the time this everything plays out. So you need to give it patience, and I think we are positive from that standpoint. But stocks, we are more positive on the upstream, which is the oil producers like ONGC, and where we think there is a lot more catalyst there, particularly coming from. They're benefiting from gas price. They're also kind of likely to benefit from lower subsidies. And we are hopeful that they also would show better production growth. So, I mean, we are more positive on the upstream side of it, not so much on the oil marketing side, where we think there's a lot more euphoria at the moment. And people are, looking at a lot more blue sky scenario.
Okay. Ashish, hi, morning. How do you approach a stock like Reliance now? I mean, post the Q2 earnings, which were quite good, it saw better GRMs, pick up in the polymer margins, good retail performance as well. What's the outlook for, say, the next 3 to 6 months for Reliance? How would you approach the stock?
Well, I think the bigger picture on Reliance, we're fairly positive there, but we think it's more over a 12 to 15 month period where you see a lot of things happening. In the interim, I think clearly on the GRM side, you've seen Singapore GRMs themselves pick up in this quarter. So they're up to $6 versus about 4.7 that you saw last quarter. So I think definitely Reliance should benefit from that. And even on the polymer margin side, I think that's still holding firm. So, I mean, from a quarterly standpoint, I don't see too much happening. But, yeah, I mean, the specs are positive, even looking at, GRM since the polymer spreads even in this quarter. So I think to that extent, that should help Reliance. But we are more positive from a slightly longer term perspective, particularly as we see their capex, petrochemical capex being a big driver over the next 15 to 18 months.
Okay. Ashish, you said that you're positive on the upstream side of the business. Within that, of course, the direct play on Brent that we have is GAIN, and that's underperformed quite a bit in line with crude prices. Has it come to a good value opportunity? Would you consider buying it? Or would you still avoid this given the way crude prices are shaping up over the last few months?
Yeah, so, I think crude is definitely a bit of an overhang on cane because it is kind of negatively correlated on a falling crude price. And my view is that, as far as the asset which cane owns, which is Rajasthan, that's clearly very good. And you see a pretty good prospect coming from them looking at their exploration results, the production growth that's likely to pick up over the next couple of quarters. So from that standpoint, it's good. But till the time oil doesn't stabilize, I think you'll probably see some overhang. To that extent, if you see ONGC, they're a little bit negatively correlated to a falling crude, which is what we kind of find, that's in a sweet spot at this point in time. So if I was to choose amongst the upstream, we basically prefer definitely ONGC at this point versus cane.
Okay. What would your target price be? Just to come back to Reliance, you said you're bullish in the 12 to 18 month period. What would your target price be on the stock now?
So we're having a fair value of 1400, which we think is a combination of a lot of things kind of turning around, particularly more driven by earnings coming from the petrochemicals, and also a lot of value accretion happening on their new businesses, which is retail. And once you have more visibility on the telecom part, I think the market will tend to look at ascribing a better value than what it's doing now. So on a fair value basis, we're looking at 1400 for Reliance.
Okay, and what's your price target on ONGC? Didn't get that, and how would you compare that to Oil India?
So ONGC, we are at our fair value sits at 505, which is pretty decent outperformance from here. And on Oil India, we're at about 726. But I mean, the reason we like ONGC versus Oil India is purely because I think the production profile of ONGC is far better. It's much larger, and I think the prospects of production growth are what is driving our preference over Oil India. But even Oil India we like for the same reasons as we like ONGC. It's cheaper, it's got cash. So both have its different reasons.
Okay. Apart from the oil and gas space, you also track the real estate space, Ashish. What's the sense you're getting about some of these good quality real estate companies that have been inching higher, so Oberoi, Sobha Developers, etc.? Is this still a good time to, be accumulating into these stocks, or do you think that real estate as a sector has now lost flavor completely?
Yeah, I mean, see, real estate, you've seen a lot of, I would say stagnation in the market over the last 12 months or so. Generally, sales are weak. That's kind of played onto stocks. But I think, the flavor will come back as you see a lot more visibility on easing of rates. In the interim, I think, developers who probably focusing a lot on deliveries and execution, they should tend to benefit. So we like Oberoi as amongst the pack that we cover. And I think, they've got a pretty decent pipeline of projects coming through over the, next 2 quarters, which should kind of improve cash flow visibility pretty well for them. And at these levels, I mean, we find them pretty attractive versus the rest. On the Bangalore market, we are not very optimistic. Yeah, it's doing well, but I think growth will kind of consolidate a bit. And the stocks have done well as well. So I think, I mean, from a risk-reward perspective, we like Oberoi better at these points.
Okay, just to get back to oil and gas now, Ashish, GAIL is one stock which has underperformed quite a bit. There is still some confusion in terms of what's going to happen with its overall subsidy burden. Last year it looked like it was out of it, but this year again there is some confusion. How would you play that stock?
Yeah, so GAIL, I mean, clearly we've been a little cautious there. The stock has done well in the interim, but off late there's been a lot of uncertainty that's come back. More, as you rightly said, it's on the subsidy part. They've been reassigned subsidy. There's still there's not too much clarity as to how they go about going forward on that. Secondly, one more concern which we think is evolving for GAIL is them being made to do a lot of pipeline capex, which while their existing pipelines are still underutilized, I mean, making them do additional capex on new pipelines does remain a risk. And lastly, you've started to see, some more news flow about them being made to cut some tariffs for, gas supplies to power, all of which is kind of a little bit of an overhang at this point. So, yeah, I mean, you see another 10% odd correction, that would be, a good time to look at it because, from a long-term strategy, it's a best consumption play on rising gas consumption in India, which we think will happen, but it's kind of pushed back with all this gas production taking a little longer to recover. So I mean, at this point in time we are neutral on the stock. I mean, we think you probably need a better valuation to get into it from a slightly longer term perspective.
All right. Now let's talk about some of the oil marketing companies, Ashish. The biggest performer this year has been BPCL. It's doubled this year. How do you approach some of these names and any top choices there?
Yeah, as I said, BPCL did very well, and we were kind of having a buy on it for quite some time. But at these levels, my sense is clearly there is. Valuations are pretty near their 5-year peak levels. We do sense that there's a little momentum at this point in time on these stocks. The big bullishness around them is then them being able to secure higher marketing margins, which can drive their profits dramatically. So we do sense they will be benefiting from lower subsidy. But my view on them being able to get higher marketing margins is a little contrarian. My sense is till the time LPG kerosene losses continue and the government has to compensate them, they are unlikely to make supernormal money on marketing margins on diesel. So from that standpoint, valuations having gone up, we are currently a bit cautious on the oil marketing. Having said that, we still like BPCL because I think A, they are the least leveraged, and secondly, they're relatively better ranked on the efficiency standpoint of their refineries and on their GRMs. So, I mean, as I said initially, right, I mean, we like the upstream better than oil marketing companies still.
Okay, final question then. In the broader market, do you have any picks? There are lots of stocks which have done well. There's Aban, and then of course you have stocks like IGL, Petronet. Anything that you like in that particular space?
So we don't really formally cover IGL or Aban, but yeah, I mean Petronet is what we are liking in the gas utility space, and that's at this point in time we think it's a preference play in the gas utility market, and so that would be our preference amongst the gas utilities.
All right, thank you for stopping by and all the best for the conference.